Bea, why the sudden net foreign buying on Friday, and will this be sustainable?
Well, if you look at how net foreign activity has performed in the past, it's evident that there is a bit of a struggle in sustaining the net foreign buying status, which is, I believe, is because of how well the other countries are performing and handling the pandemic in relation to here in the Philippines. Several countries have already started returning to the pre-pandemic levels in terms of mobility and the reopening of the economy. And if you compare it with how the Philippines are classifying their mobility restrictions, we are kind of seesawing between GCQ and MCQ in almost 2 week intervals, and that likely poses some volatility that the investors aren't very welcome to.
Bea, now that GCQ is in swing again, so to speak, how does that affect your earnings outlook after, of course, having seen the first quarter performance?
Well, so far during with what we've seen in the first quarter releases, earnings have been generally in line with what we have expected since we already priced in how the pandemic will affect the company's profitability early on during the pandemic. We've also priced in to an extent how create law will affect the companies. But what's really important to look for here is how long the GCQ will be in place, since mobility is important in restarting the company's operations and for it to normalize, especially for essential sectors like retail and the likes.
How are you treating the banks now, especially since the first quarter earnings seem to be good for most of them, but you did mention that that's just in line with what you were expecting.
Well, stock price movement wise, a lot of the big banks are just trading at a range. But it still goes back to how volatile the pandemic is progressing, because consumer and business sentiment would take a while to recover, and it will hinge on how well we would be able to curb infections, especially now that vaccination programs are underway in several LGUs. So if that is sustained, then the country would be able to achieve herd immunity by, as what the reports say, second half of the year. Then it would likely return the confidence in lending and start boosting the bank's core businesses as well. Because what we've seen since the start of the pandemic and up until now, actually, is that the core business has been um, quite a challenge right now because of the low demand in lending, despite the low interests as well. And most of the bank's profitability hinges on non-core businesses like trading gains, which is very opportunistic in nature, and also how aggressive they've booked provision losses last year. Because then, as with what I've seen from other banks, they have actually substantially tapered their provision for soured loans because they already did such a bullish job last year that some pressure on the bottom line has actually eased.
Okay, so can you say that they won't be booking any more of these big provision losses for the rest of 2021? They've actually already adequately put aside part of their profits for that.
Well, at least for the big banks that have a smaller exposure on retail banking, it is possible to say that provisions have already tapered down and maybe even returned to pre pandemic levels soon. But of course, the NPL formation is still there, especially for consumer lending, because of the expiration of the loan moratorium. So um, for the larger banks, yes, maybe it's possible that provisions have eased, but of course, you also have to watch out for how retail banks would proceed with their provisions.